That should be good to go. Good evening, chat. Can you hear me? Everything look and sound okay? Hope everyone's doing well. Nice to see the familiar faces, as always. And a special thank you to reaching 50 likes before I've even said a thing. The like Marines, as they're called. Very much appreciated. You know it helps out the channel, and it's cool that we get that kind of support, so thank you very much for those of you who've clicked that button. If you haven't, I'll try to convince you during the course of the next hour or so. If you're here from Telegram and haven't subscribed to the channel, shame on you, do it. Because it's not just live streams, also working on weekly videos, non-live stream, pre-recorded cool stuff for the channel as well. So plenty going on here. We've already got, 8k subs. All our videos get a high sort of viewer per sub ratio. All your support's been fantastic. Thank you very much. Normally the intros are really long. I'm going to keep this one brief so we can just talk about markets and then do the admin stuff at the end. But of course, first things first, thank you to Bybit for sponsoring Technical Roundup. As you guys can see, it's really nice that we can just do these live streams, make content that we want to make. There's no kind of shilly price to pay for it, not shoving ref links down your throat. There's not a kind of shill video that goes on the channel every week or a bunch of tweets. Like, it's a really, really cool relationship that's content focused and lets us do cool stuff. And we're grateful for it. So go check out Bybit. Links in the description. Try punting there. Say hello to them when you see them crossing the street. It's it's a very neat set of circumstances. So we've got a few things to talk about. High time frame closes, the majors. I want to talk about Link, and then I've added some sort of DeFi stuff, and I've added a lot of it to my Binance futures list as well, so I'll have a chance to talk about all of that. Plenty to go through, so smash all the buttons if you haven't already. Let's get into it. So the monthly close is tonight, going on, I think so, right? I'm not totally special. Yeah, the monthly close is tonight. We've just had the weekly close, so we can get some high time frame context. I'm not going to get out a clean chart. I'm just going to draw on top of this one. Now, you've probably seen this a million times from my channel, where we've closed above resistance, and the next level appears to be at 14k, right? Again, does that mean we can't retest this level and then do something, or even fake out and then the market takes a shit? Of course not. You can't rule any of that stuff out, but really you have to trade what's in front of you, and for now it looks like a close above resistance, which means one way or another, either on a pullback or direct continuation, until proven otherwise. The more likely route is to 14k. Okay, that's a sort of reasonable thing to say, I think, for the monthly time frame. The weekly close has been pretty spicy. Obviously, you can see just by eyeballing it, the market's kind of just slowed after the breakout, which isn't too unreasonable because you had basically 3 impulse candles on the weekly time frame, which is 3 weeks of like a strongly trending market, right? That's a pretty big deal. And so going sideways isn't the worst thing in the world. Normally, again, in a strong trend, when you get an impulsive move and some sort of consolidation, more often than not, you expect that to resolve to the upside, right? The fact that it's consolidating isn't a sign of distribution or isn't a sign of a weakness per se, right? Like, if you get in a bearish trend or in different high time frame conditions or at resistance, you can make separate arguments. But if the market's just absolutely smashed the level and had 3-4 bullish weeks and is now moving sideways, I wouldn't jump to call that distribution until you actually get some evidence on lower time frames. And as the level we've been paying attention to for a while now is 11.4, 11.5k area, top of the previous range, yada yada, and we had a close above it, and then pretty much been using it as support for the last couple of weeks since then. And you can see we had a scary looking at the time weekly close, which spiked previous week's high and closed below it in the first red candle in like, I don't know, 1, 2, 3, like a month of price action. Seemed like the end of the world, but really there's been no significant follow through on that yet, certainly if we're using this time frame to analyze what's going on, because then the next candle basically reversed that, whereas the red candle closed above spiked above previous week's high and closed below it, This most recent weekly candle did the bullish opposite of that, if I can start making up terms, whereby it spiked previous week's low and closed above it. So it's just a range, just moving sideways. And again, when the market's trending strongly or above key levels, we have a presumption that sideways will resolve in the direction of the trend until proven otherwise, right? That's not too unreasonable. But again, not to lose sight of context. If this isn't enough and the market really does get stuck here and pokes again and shows any sort of weakness, we know that there's a lot of space between 11.5, the high time frame weekly level we're looking at now, and then the next area closer to kind of 10.7-ish or mid 10k for a starting point. One thing I want to clarify about the 10.7 level that I keep referencing is there's this misconception, if that's a kind way to describe it, that these monthly levels are just incredibly ironclad, and if the market's going to bottom, it's just going to completely kiss the 10.7 level and then reverse magically. Again, you have to give these levels a lot more space given the time frames that they're based on, right? So you can see, for example, you've got high time frame support, yes, at 10.7, the quarterly level, but also the monthly level at 10.3. So from a high time frame candle formation point of view, it wouldn't be unreasonable to get, for example, a wick through the lower boundary of the level, which then closes above the upper boundary. Now, would price action like here mean that 10.7 failed? I mean, no. It's pretty common for price to wick or trade below or trade to the bottom of support, wherever it may be. So when I say 10.7, I kind of mean price settling there after likely trading lower or wicking lower, or the bottom, the low, can freely poke to lower price levels. So I know I talk about 10.7 a lot. Just providing some context, if we do trade there, I'm not expecting just the whole thing to bottom from there. This is just the first kind of high time frame area to start paying attention to. If anything, I think if we break down from 11.5, it's likely that we poke and prod closer to mid 10k, 10.3, etc., rather than magic wick to 10.7 and then reverse. What I don't want to be the dominant interpretation is that, let's say we fall below 11.5 and then the market on the daily time frame closes below 10.7. It's like, oh my god, that's it. The best support on the chart's been broken. It's all over. Not quite what it means, right? We just have high time frame areas to work with. Cornholio, that's just like a clarifying point. Cornholio says this looks like a weekly breakout. Yes, it does. I mean, we always have to trade what's in front of us. And from the available evidence, until proven otherwise, 11.5 is support. So I'm not going to get any sort of bearish directional bias as long as that's the case. Okay, I don't think there's been a strong argument for it either. I mean, on the daily time frame, we've discussed the failed breakout argument, which was fine, but even then you would have expected follow through from that daily bearish setup to at least be able to close below or show weakness below weekly support, especially where price has been consolidating, but the recent weekly closes, as mentioned, have not supported that bearish thesis at the moment. Okay, daily time frame, very similar to before. I want to bring your attention to a couple of levels on the daily time frame. We will get to the ETH, Luna, don't worry about it. Sorry, my sister's new dog is called Luna. I'm not calling you a dog, it's just the association by name I have in my head. Don't know why I felt the need to mention that. Anyway, to quickly recap, the bear's argument here is that we had the failed breakout above this level of resistance, and so then we had the bearish retest, and then technically, again, some will disagree, and I don't really give a shit. I mean, market structure, whatever, everyone has their own definition, and what's more important is how you trade it. For me, on the closing basis, market structure was broken by this candle here. So technically, rallies into resistance on this time frame, etc., would be for selling, right? So into, for example, the level that we're dealing with in the first place. Now, again, the reason why I don't want to take, or if you want to be really pedantic about it, you can point to the most recent pre-breakout range, pre-breakdown range as resistance. That's fine as well. The reason I'm not shorting or looking for a lower high is simply because the high time frames aren't supportive of that. So if my monthly looks good and my weekly looks good, and I've missed the first bearish setup on the daily, which was here, and now the market's pulling back to the same level, with this high time frame context essentially not being aligned or confluent, that's generally not a setup I'll take unless something really spicy forms on an intraday basis, and even then it would be an intraday trade, and I think there are easier trades on the table in those circumstances. So contextually, yes, the market's still at resistance, but given what we've talked about on the monthly and weekly timeframes, and as I've discussed in my short video clips, what I'd prefer to see is the bearish setup fail, so any break above this area and then either pull back into the high and then new highs, or just a strong break that then offers some sort of intraday consolidation or continuation pattern. And once bears start unwinding and eat a plate of shit, should this level be reclaimed, which I think is likely, if that occurs, then I'll look to basically take advantage of the move that follows. So for now, at resistance, not a level that I'm selling, but if I get some sort of bullishness through it and put these guys in an area of discomfort, I think that's where the easier trade is, personally. And again, you'll recall from pretty much every single live stream, just because of how often this pattern plays out, markets don't, especially on the high time frame, don't double fake for the most part. So if this is a fake out, you expect the level itself to act as resistance. So it's less likely that if we get a breakthrough here and the market pulls back, it's like, oh, but what if it's, this price action all over again, just a second fake out? It really doesn't happen all too often. So any break through this level would be reasonably convincing to me personally, simply because kind of lightning doesn't strike twice type of nonsense. Okay. Still playing it for the most part, one level at a time, right? So if we lose 11.4, this weekly level that we've been holding for a while, then I'll probably defer to the daily range. That is to say, short-term target would be the bottom of this consolidation closer to 11k, and then we're informed in terms of higher time frame levels. This area is put into context by our kind of monthly and weekly levels. That seems less likely to me at the moment, but, I'll be prepared, whatever happens, sort of thing. Fantasy Cricket Freak says short-term bearish. Not really. I mean, at resistance, yes, but I'm not looking to sell these levels. I think it's a reasonable setup, but just because of the high time frame context, I think there are easier trades on the table, so I don't want to force kind of fighting for scraps on a retest. Again, I think the convincing bearish setup was here, and now that we've come back to retest it after a bullish weekly close, I just think the probability is lower, and the easier trade is something like this. Okay, that's just my personal view. So that's Bitcoin. I think that's reasonably straightforward. Nothing really to add on the intraday timeframes. Most of that is explained or covered by the daily analysis. So in a similar vein, you can see that where we've got the daily range at 11.8 and the intraday range high at 12k, we're basically referring to this consolidation here. And this is the bearish retest that took place. So I don't want to sell the second run of this, even though I think something like A to B is reasonable. If you want to take that, fine. I'm personally not. As I said, we're essentially dealing with this consolidation in one form or another. So the easier trade on the table for me would be essentially some iteration of this. Okay. Yeah, that's Bitcoin. Let me know if you have any questions. ETH's been really kind and behaving really well technically. So on the monthly time frame, it looks like we're going to get a convincing break of the 400 level, 394, 400, doesn't really matter too much, which is this level here. And it kind of, at the moment, again, there's still some time, blah, 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 but from the available evidence, and there is a strong case to be made on the weekly time frame for this being particularly true, but it kind of looks like what happened when the 300 level just kind of got smashed, right? And then and you just got bullish continuation on the same time frame. Like, this is a big level, don't get me wrong. And you had the whole swing high, confluence, etc. Market just rinsed it and traveled to the next level, right? So it's kind of looking similar from the available evidence at 394, 400. I might curse it, but who knows? Looks strong for now. So if we break this area on the monthly time frame, I think the likely continuation target is the opposite side of the range, which is around 700 here. And you could force, if you wanted to, not the best level in the world, but if you just draw a midpoint, it lands somewhere around 530, 550-ish, something like that, okay? But generally, if you view this consolidation as kind of an old range, right? the sideways, the range that occurred before the bear market, should have been resistance or active resistance here. Now, if you reclaim the bottom side, you generally trend towards the top side with a bit of stumbliness at the midpoint. So that's what the monthly bias would suggest if we close anywhere near where we are now. Again, with monthly closes, it's directional bias is good. Finding levels and areas in which to refine levels, that's also really good for this time frame. What's less good is using it as a kind of purely mechanical entry trigger, whereby, well, monthly close above resistance, therefore monthly, I'm just going to mark it long at midnight. It generally doesn't work that way. Even when the market is resolved bullishly, you'll often get just like, the monthly close and there's whole market-wide consensus, hell yeah, resistance is broken, and then intraday there's just like a massive nuke which gets everyone really scared, and all context and sight of the bigger picture is lost. So I don't think that's what it's useful for, but certainly for informing lower time frame trades and bias, all that kind of stuff, I think it's really good. So long story short, above 400, I think a move towards whatever 670 is likely, and there's a midpoint area at 532. So you can see that low to high. If we reclaim the low, the high is likely, and the midpoint lands around 532. Okay, the compelling argument I'm talking about on the weekly time frame with regard to this 400 area getting smashed is if we look, let me just open up a clean chart actually. Right, if we take this chart and draw this monthly level, and this is where the time frame alignment stuff kind of becomes cool. So we've drawn on the monthly level here, same one, and then we go on the weekly, and you can see that the monthly quote-unquote resistance is being, and certainly by the most recent weekly close, being used as support. Now, if you're high time frame bearish or looking for signs, like, I always talk about time frame alignment, like, okay, we're at monthly resistance, I'm going to look at evidence on lower time frames to see if it's going to do its job. So let's jump down a couple of time frames like the weekly or the daily and, make that holistic assessment. If you're looking for signs of resistance or evidence of monthly resistance on the lower time frames, and this is the shit you see on the weekly, I wouldn't be terribly confident in bearishness just from what's in front of me, right? Now, again, it's not too uncommon to say get a bullish close on the weekly time frame above a monthly level, and that sets the top, and then you get a kind of bearish close, and then generally price, finds resistance at the level and trades below it, etc. But seeing price as it is now, which is a break above the level and then using it as support and now trading higher, this price action just does not look like high time frame resistance is particularly keen to do its job. Now, again, if that changes, so will my bias. I can only ever trade and make plans and whatever on what's in front of me, but just to give some further credence to that idea, this is surprisingly clean. Timeless Being, if it's the bloke from Twitter, hello mate, how are you? Cred, how much of your decision making is influenced by markets at large? US election in 2 months, it's risk off into elections kind of stuff. SPX seasonally performance in September equals poor. Biden upset likely washes out longs. I think the benefit of trading kind of high time frame level to level and getting significant signals even on a week to week basis is that if that has a material impact on markets, then my system will probably tell me something sooner rather than later. It's kind of just like the halving, right? It's like such a big event, fundamental this, and my view throughout the whole thing was if it's as important as it's supposed to be, or if it's going to play out as expected or have some sort of material impact, I expect the high time frame players and therefore the high time frame charts to align or show that in one way or another. So I suppose a benefit of my system, and to answer your question, how much of my decision making is influenced by markets at large, it is, but not directly, but more as a side feature in terms of how those markets at large make my charts look. I hope that kind of answers your question. But it kind of all flows together. Like, if it's that important, if it's that bullish, if it's that bearish, I expect it to show up. And if it doesn't, well, why the fuck am I trading something that isn't in the charts? And if it comes later, well, I'll act on it then, etc., right? That type of deal. I hope that answers your question. So yeah, that's just kind of showing that monthly resistance isn't terribly, isn't doing the job it's supposed to if the high time frames are to be bearish, right? That's fairly straightforward. Going back to this, so that's the weekly. We see evidence of weekly support at monthly quote-unquote resistance, so that's bullish, right? On intraday basis, also, anyone remember, because I've punted some ETH longs, and I got long at 373 and whatever, tweeted, blah, blah, blah. Not that any of that shit matters. But do you remember what I said about the magic little red box for directional bias, where we use the lowest close and the highest close for directional bias, and the places for longs are the bottom of the box and or a breakout of the top of the box? Like, I don't make this shit up. This kind of stuff works, right? It's really straightforward. We're dealing with clear high time frame levels and structures, and so when I got long at 373 or whatever it was, the setup, which seemed kind of, oh well, you know, looks so dumpy on the intraday time frame, like this was literally it, right? Like buying this line. And an extra bit of confluence was that I felt absolutely fucking terrified that the market's about to teleport straight to 300, and we just set the monthly wick, and you know, I was about to get slipped half my account. So when I get those type of bitch-made signals in my brain at high time frame support, I just usually mark it in, which is also great. Sushi Lover, this KGB guy repeats himself so much I can't focus and want to watch kitten videos. You can go watch kitten videos, Sushi Lover. No problems with that. I think an equally valid replacement to what I'm doing here. And again, for your benefit, if I repeat myself so much, I make 2-minute, 1.5 minute short clips on Twitter for those with limited attention spans, so you can always go check those out. So with where ETH is right now, I think a couple of levels that make sense. On the intraday, just because this thing hasn't been terribly keen on pulling back, I've still got this kind of cluster range low thing marked out here. You can draw the range high if you want. I think it's as relevant. So for aggressive continuation, and you can see it kind of formed a bit of fucky structure where it closed below it and then strong close above. So if you want to be really pedantic, the level is untested, at least on this time frame. If we pull back from the range high, either before reaching it or, you know, on some sort of failure, etc., I would very much be looking for signs to do business back at this range, just for aggressive continuation type of stuff. So that's between whatever 421, 422, etc., just to see if buyers want this. Okay. And if not, then the other level that I'm paying attention to is slightly lower down, but this rectangular boy here, which kind of lands at the origin of the breakout, right? And this level is not too far away. This is closer to 400, whatever, 407, 410, etc. So intraday, let me actually draw that so we can all have a chat about it. There we are. And we're going to make this in blue as well. So kind of plan-wise, okay, I think the most aggressive kind of bullish continuation for any sort of pullback will come from grey box intraday, something like this. If that fails, then I'll probably miss out on the top of this range just because it's too close to the grey box, and look closer to 405, 407 for any sort of longs. Again, now you could break out long the top of the range because, you know, no high time frame resistance, blah, blah, blah. But I think there's a significant risk of being the short-term top here if you're a breakout buyer above these highs. Not something I typically do. This is getting really cluttered, so let's just quickly re-establish where directional bias is, and it's based on the magic box that was drawn. So you see this 0 and 1 and daily lowest close shit? It's literally the daily box that we drew last live stream and have referred to previously. It's this, okay? So what I don't want to see is price pulling back. I mean, all of this sort of stuff is fine, whatever, eat your heart out. What I don't want to see is a break back within the range. That would suck. I don't think there's any reason for it. We've tested the range low. We've been at the range midpoint. You know, we had a failed bearish close at the range high that then got engulfed. At the most extreme, a retest of the kind of 400 level on top of this range would be acceptable, but any bullish directional bias, at least in the very short term, or for aggressive continuation, for me would be invalidated if we fall back within it. It's just kind of a piece of shit at that point, and kind of frustrating move back within the range. If the market is fast moving and strong, etc., there should be no reason for that to happen, and continuation should be forming from much shallower pullbacks rather than retests of high time frame levels. Ethereum makes sense. Kind of where we are now. Continuation levels and invalidation. People somewhat clear. Okay, nice. Nice. As for my trade, because, you know, I'm not a huge fan of tweeting just actual entries, management, etc. on Twitter. It's a pain in the ass. If you get it right, everyone's like, yeah, you're supposed to get it right. If you get it wrong, it's like, you're shit at this, and blah, blah, blah. Just a bunch of bullshit. Used to, you know, when you're a smaller account, it's fun. You've got eyes peering. It's far less fun, and you didn't get paid for calls either, so whatever. But anyone wondering for trade logic, entry around the range low, it was like 373. You can see 372.21 is the exact level. My take profit was 387, right? In this instance, this bit of price action, and that's literally the midpoint between the range high and the range low, right? Just the mean here. I did get a re-entry signal on this bit of price action here. Pretty much, I mean, sold off here, felt really clever that it's just gone from my take profit back to the level. I technically, for those of you who give a shit about my system, it did trigger a continuation entry once this got flipped. 386 through here. I didn't take it, and then I was looking for something clear at the top of the range, but you can see it kind of got really fucky. Closed above, closed below, and then the bullshit, which I say never happens, happened. Surprise, surprise. Closed above, and then closed below again. I was like, right, this is just like a grindy piece of shit. I don't want to touch it, and then obviously it broke out. So that's the market for you. But yeah, so just to summarize that, monthly time frame looks good. Certainly if the monthly closes anywhere near above, I'm getting all my prepositions fucked up. If 394 gets destroyed and kind of closes near to where the market is right now, there we are. English is a difficult language. I think the next stumbling blocks are 532 and 669. Okay? On the weekly time frame, that's supported by the fact that this high time frame resistance is being used as support, so that's generally pretty positive. And I mean, the daily time frame just at the moment simply broken out of the range and trading higher, so pretty hard to be high time frame bearish. I think short term my bias would flip from aggressive continuation to fuck this if we fall back below 400, and then that would kind of make the monthly look maybe shitty, and we'd probably have to spend more time within this consolidation. Again, if we're in an uptrend, fast-moving market, blah, 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 shouldn't really be doing any of this deep retest type of stuff, okay? ETH BTC. Really big one here. Oh, wow, this looks fucking mental, mate. What? Am I sleeping on this thing? We will look at Link. I am 23. Yeah, so ETH BTC kind of looks cracked. And the reason for that is, again, if you want to use wicks, bodies, etc., I mean, kind of a distinction without a difference. I'm personally going to use candle bodies because that's what I generally do. So if this is, again, it kind of closed out the level. This could still look a bit rough, but any strong continuation through this area, I think there's legit a 50% move until the next level of resistance. And that would generally mean a strong Ethereum Bitcoin means that, first of all, DeFi is the future, obviously, that's what that would mean. But second of all, the ETH USD longs will remain favored to BTC USD longs because ETH is stronger than Bitcoin on a relative basis. Okay? If you want to be conservative, which is a crazy thing to do when the market's bullish, but, you know, here we are. You could use the wick for the top of this range as well and argue that the market's currently at resistance and wait for kind of a similar conclusion, some real strength through here, like a Chad candle on the daily time frame, and then same rules, any continuation or probably a shallow pullback. At that point, there is a ton of room for ETH BTC until the next level. Okay, so that looks really positive. Yeah, from a high time frame point of view. Lower time frames, not really much to say. Higher highs and higher lows, right? Market structure is certainly generous. Whatever, low, high, blah, 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 you know. And that's the thing. When there is a dominant trend, the way you get fucked up is by looking, for example, in an uptrend, your focus should be on where is the higher low. What a lot of shitty traders will do is they'll see a top and then the market starts pulling back. Instead of looking for the higher low, as the market rallies, they're like, oh, where's the lower high going to be? Where's resistance? It's just like such a simple manner, or I suppose a matter of readjusting your framework. But it's literally how you lose money and blow up in a trend, right? So if you know there's a dominant trend, if it's bullish, right? So let's do this. If the trend is positive, you're looking for lower high where, right? If the market's pulling back. If the trend is... If the trend is negative... What the fuck am I talking about? If the trend is positive, you're looking for higher low where, right? Because if the higher low comes in, you're expecting, surprise, surprise, if the trend is positive, a higher high. So this is probably the best place, risk reward wise, etc., to get positioned. That's what you're looking for if the trend is positive. If the trend is negative, it's the opposite of that. You're looking for lower high where. So when people say uptrend, buy dips, downtrend, sell rallies, I mean, that sounds cool, but this is the more useful, in my opinion, manner of framing things. That in an uptrend, you're looking for the lower highs to form when the market pulls back, and in a downtrend, you're looking for the lower highs to form when the market rallies. If breakout buying and breakdown selling isn't your cup of tea. This is really fucking important. Okay? Really, really important. If you have no idea what any of that means, I have got an article on directional bias. Okay? Just literally type in crypto cred, directional bias, one of my best pieces I've ever written. Nobody gives a shit about it because it's not sexy. Whatever. Bagsy's read it. I think he's a better person for it. Go ask him if it's a good article. But all of the stuff about high time frame kind of unfucking your mindset is in that article. So go read it. And also in the old newsletter about trading a strong trend. There's so much that you can fuck up when the market's making your life easy, right? Don't do it. I wanted to talk about some of the majors really quickly, and I think the stream might go on for longer, a little bit longer than usual, unless you have very strong objections, in which case, what the fuck are you doing here anyway? Nobody's asking you to stay past an hour, you know? Just click off if more than an hour somehow offends you. I'm not going to babysit your time management, Jesus Christ. Anyway, a lot of the majors kind of look like dog shit. So, sorry, that's a piece of shit. CoinGecko, which we all use, because... fuck CoinMarketCap, all the homies hate CoinMarketCap. If you look at the top, whatever, by market cap coins, and then you kind of look at their charts, you're just thinking, oh my god, someone take the trash out. All of this stuff looks so washed up. USD pairs, BTC pairs, market's dead, like nobody really cares, right? And I think the monthly time frame, and obviously Donald and I have to write these things up for our newsletter, which is free, link in the description. But it just makes for such a dog shit writing process a lot of the time. Because it's like, oh, look, nothing happened. Oh, bearish retest, great, fantastic. Can't wait to write a paragraph about how this has looked crap for the last 3 months, But I think looking at the monthly time frame really paints that story really well. I said really twice, totally unnecessary. Like if you look at Bitcoin Cash, right? Trend, pretty clear, and this is against Bitcoin, obviously, but a lot of USD pairs on some of these is better, on a lot of them it isn't. Monthly bearish retest. Dog's dinner. EOS against Bitcoin. Monthly bearish retest. Dog's dinner. Litecoin. Monthly bearish retest. Dog's dinner. XRP. I mean, are you seeing a theme here? These look awful. None of these, I mean, come on, they're so terrible. I mean, there are some exceptions, and a couple of them, blah blah blah, you know, lower cap, etc. But just if we're talking about majors, they look so rough right now, especially against Bitcoin. Okay, again, with some notable exceptions, but for the most part, as Brendan says, old alts cooked versus Bitcoin for the most part. Absolutely, mate. Just trashed. All the money is going towards new shit, as it should, and towards linear futures perps as well, right? That's where the stuff seems to be, which is good. And I think anyone remember the old school Casual Friday video made with the duck, where we talked about kind of alt season and how the argument was that new coins, like, it's still going to happen because everyone's bloody greedy, which is good. But it's going to happen in new coins and where there's a hype and narrative, not the old guard. It's kind of nice to see that validated to a large extent. I don't know what the fuck is going to happen to the old guard per se, but it's just interesting to see that play out way quicker than anticipated. I want to talk about. Do I want to talk about Tezos? Probably not. Ugh. What I did with XTZ and just got rid of a lot of the trend line junk, etc., and essentially deferred to the weekly range that we've been talking about a lot. And again, the Link's big brother argument is only valid if 35s is broken on a weekly basis, right? Just how Link closed above resistance properly, and then went up. XTZ was shielded at resistance, and it kind of, you know, closed at the level. Dog shit. So what I've done, instead of having all these different levels, trend lines, etc., is that range we've spoken about at length, turned it into, you know, those are the three levels that I have on my chart. So highest close, lowest close, and then the midpoint is whatever, the mean of the range, right? Weekly close below it, so I'm expecting this area to act as resistance. But really, the short-term price action, however it resolves from the midpoint, not terribly interesting. Setups-wise, as I've said, I want to do business more at the extremes rather than the midpoint. So strength through here would be fine, or some sort of gnarly failed breakdown attempt that gets reclaimed closer towards the range low. So breakout buy, YOLO, or range low, failed breakdown. I think those are the better setups for XTZ, at least against Bitcoin. And then this, where it is right now, is just totally uninteresting when it comes to the technicals, right? I wonder if the USD pairs looks terribly different. I mean, this doesn't. I mean, if it I still think a pullback is kind of better here, because if you look on the weekly time frame, had a weekly breakout, right? Higher high, whatever, high, higher high. That's generally positive. The fact that it's fallen back within the range, that's okay in the short term. So then at that point, you know, where is the higher low likely to form if this thing is indeed bullish? And it's this pre-breakout consolidation or the last resort trend continuation level. So that's kind of $2.3, and I think this is $3. My box is covering it. So that's fine. I think if this pulls back to support, I'd certainly pay more attention to this. Not that I trade XTZ USD, but just from a technician point of view, I don't think this is the worst looking chart in the world at these levels, right? Again, quick recap for why this makes sense. Like, isn't it bearish that it fell back within the range? Yes, but only in the short term, right? When you get a break, some of you are going to groan because the amount of times I've gone through this. When you get a break in market structure, the two areas we look for continuation are at the level itself, where market structure was broken, so that would be here, or we look for a higher low, but you know, at a reasonable retracement level between the low and the high, which broke market structure. So in that case, here and here. Reasonably straightforward, I hope. Link's a really interesting one. I remember all certain days you could log into Twitter and all you would see is Link. Hit the like and the subscribe button if you haven't already. Sorry, I had to do that. David's got a gun to my head. Yeah, so, you know, certain days on Twitter you just log in and all you could see is Link, which is fine. It made sense. Where it is right now is still a pretty interesting area. So you have, and the USD pair literally looks the same as the BTC pair. You've got this cluster as support, and then this cluster as resistance, and kind of volatilities. I mean, it's still a decent range to trade, certainly on an intraday basis, and you know, certainly the perps are liquid, so can do business there. But support is supporting, resistance is resisting. I think for Link, what would be a great setup is, as you can imagine, a break above the level, which is clearly proven its resistance, and then any, surprise, surprise, consolidation breakout or pullback to the level breakout. I think we'd easily see new highs. And as mentioned earlier, the USD pair is a 1-to-1 analog of that. So if you prefer doing business in the linear futures or whatever, I think the same technical argument can be made. So strength through $17, probably take the high at 20 and then go much higher. Okay, I think that's the easier long setup on the table. As always, I'd love to be able to predict what happens at the lows, but I can't. The general model, as some of you have probably picked up by now, is any attempt to break the level, which then fails on a bearish retest, is generally something I really like, because it's risk defined for me, and I get to do business close to structure. So that would be sick, but it's not the kind of level that I bid blindly, hoping for something like this. Certainly, once support has been established within a range, I like to do, well, first of all, business at the extremes, but ideally somewhat beyond the extremes, so they can define my risk for me, and I really know where I'm wrong. Okay. Another cool thing is, hopefully some of you have watched my timeframes video, where I talk about how a candle, higher time frame candles kind of have to form. So a high time frame level being quote unquote broken on a lower time frame doesn't mean that the high time frame level is magically invalid, right? You got to give it some breathing room and the appropriate context to watch a chart actually develop. And there are some great questions in the chat. I'll get to those really quickly. This is a really good example, actually, where we've got daily resistance at 16.17, and it kind of looks like at this point, if you're rushing to conclusions, that the daily level has been broken, right? But if you have the appropriate context, you're a bit more conservative, even if you wait until the daily close, in this case, which is a reasonably conservative criterion for this sort of shit, you can see that this seeming, apparent breakout was actually just a formation of the daily wick. And then, the closing price was whatever, below the level, and has kind of sold off a bit since then. So this is the kind of a really good example of the kind of shit I talk about, where I say, you need to be fair when assessing high time frame levels. Yes, we sometimes have to jump to intraday timeframes to get, aggressive triggers or whatever it may be, management signals, etc., etc. But don't be hesitant to cut these trades if the level clearly doesn't turn into support. Right, so I don't think it's the worst idea in the world if you just punted this for continuation into whatever the origin of the breakdown or the highs, etc. But certainly from a trade management perspective, when this sort of shit starts to happen, in your mind you should be saying, right, is this the daily wick? Did I just buy daily resistance? Okay, so that's why trade management is also important. And surprise, surprise, there's a video on trade management on my personal channel, which you should go watch. Crypto Corona Bulldog, fantastic name. Cred, are you on Uniswap? What are your thoughts? Seems like a scam to me and hesitant to get in. Am I missing out? I'm currently not on Uniswap, to my great shame and embarrassment. What are your thoughts? My thoughts, again, not investment advice, etc. I think it's worth sending a bit of ETH to Uniswap and just punting around, seeing how it works, taking a dive in some shit coins with money that you've essentially written off. And I had this discussion with myself in terms of, why the hell am I not on there? And I think it's important as crypto traders to experience the ecosystem as it is, right? If you turn into some derivatives maximalist, like, oh, may I only trade Bitcoin dollar and Ethereum dollar, etc. I mean, what's the fucking point of trading crypto in the first place? Go trade, E-mini futures and become a wannabe real finance Chad. The whole, the cool thing about this market is the kind of permissionless innovation, etc., etc. The experiments, the rug pulls, the scams, and I really think, certainly when the community rallies around that kind of shit and new stuff and dumpster diving, alt season, all of that kind of stuff, it's really worth at least dipping your toes and getting a real feel for crypto. You know what I mean? That's my personal view anyway. I think that makes sense. It's more to do with, like, crypto trader identity, if you're into that shit. In terms of actually making money, opportunities, etc., I'm the wrong fucking person to ask. But I did retweet a video on my Twitter earlier with an interview with Crypto Messiah that Luke did, and that's really good, and it'll get you started, at least. Videsh says, ETH USD, ETH BTC, watch the replay or jump back. We covered those at the beginning. So yeah, that's my answer to that. It's a great question, though. So yeah, I hope Link is straightforward. TRX is launching some DeFi thing called Sun. Pretty mental. No strong views on TRX around here. DeFi purple is just going up. This is FTX's basket. I'm not sure how it's balanced or how it's set up, etc. But the trend is kind of straightforward on this one. A bit grindy, but overall intact. I think this is an important one to generally keep your eyes on. Might not be the easiest to trade, but at least as an index, it's a good one, right? Swipe is a really interesting one. This is the credit card whatever type of shit thing, isn't it? This kind of looks like crap in the short term, but I think there are some really good levels if we're lucky enough to get them. If we look at the current bits and bobs, and we've talked about this chart on stream before, where we basically have this old range, right? But I'm just going to draw the levels that matter. So the lowest close and the highest close. Okay, and as you can see, you got a shitty close above the level, which, failed below this high. I mean, not the kind of breakout that I like to look for. When I say, just to be clear in terms of technical terms, right, if they can be called that, this is all just making shit up, drawing stuff on charts. However, when I say a breakout or a reclaim or failure or use those sorts of terms, I really want to see evidence of imbalance at the level. Or to be more colloquial, the candle has to show me that one side of the market has eaten a big plate of shit. Right? So not kind of small candles or closes at the level or something just generally unpersuasive, something that swing fails above a high. I'm not interested in any of that. I need real evidence of strength that the sellers at the level or the buyers at the level ate a plate. Okay, that's really important when I talk about this sort of stuff. It's not always clear, but the good thing is if it's not clear, then there's probably not a trade there based on that in the first place. Helpful, right? So the price action which unfolded here, basically a failed reclaim type of thing, where it closed technically above the level but looked like crap, and now it's finding resistance at the level. So in the short term, I think it's likely to trade towards the nearest support here, but likely you can see there's some confluence at this, whatever swing high top area type of thing. So not terribly keen on it here. I think the two setups that I'd be more inclined to take, something attractive intraday at the level itself, so pull back from A to B, something here, or I think in an uptrend, if the market's bullish, there's no shame in paying up for a really good entry, especially one that's going to be stress-free. So once it resolves at the range low, whatever form or shape that looks like, it does this, doesn't really matter. The breakout through the top of the range, there's basically no resistance at that point. Again, it could look like this as well. You just need to be ready, really. At that point, I mean, yeah, resistance at the high, sure, but if the market looks anything like it does, it's probably going to get smoked. So this swing high is nice. Breakout of the range, probably my favorite entry to get bullish this thing. But for now, it just doesn't look very good. Market doesn't look ready enough on its first attempt. And I think the perp looks the same, just without the failed reclaim, actually, right? If we draw this out. It looks, yeah, it's the same, just without the nonsense. There we go. Ooh, this is actually quite a nice chart, isn't it? Hello, sweetheart. Right. Yeah. So the structural analog is there. Lowest close, highest close, found resistance, short-term support at the low. The real trades for me would be breakout of the range towards the high and then price discovery, or a retest of the range high, ideally that does something which is risk defined and kind of takes a stab below the level first. The long or delist level for me is at $1.50. That if this level breaks, then the scam goes to 0. I mean, obviously exaggerating, don't get a bunch of swipe maximalists getting angry at me, but kind of last ditch effort, best risk reward really, support trade is at 1.5. But we're dealing with ranges, right? Surprise, surprise. This old consolidation and this old consolidation, and it's really the top and the bottom boundaries which matter. So adjust accordingly. Comp is just a mad thing. Also, where do all my bloody levels go for comp? Comp was one of those that was really technically clean and then got sloppy and kind of chopped up of my levels. And when a market chops up my levels like an adult, I just have an emotional breakdown and stop communicating with the chart and probably just rage delete my levels. Totally normal thing to do. I think there's some governance thing going on with this. I don't have a bloody clue, to be honest. If you put a gun to my head, if we're still dealing with the pre-breakdown range, we're almost at 200 likes. Pull your fingers out. If we're still dealing with this, then at least to be intellectually consistent, probably the breakout through 255 would be valid towards the high and then likely higher. Okay? I could be convinced of a pullback to 203 and doing business there. I'm kind of on the sidelines just because of how much my other levels seemingly got chopped enough for me to rage delete them. But look, if the trend is strong, there's no shame in buying strength. If you're more of a discount type of guy, 200, around 200, I still think is a good and technically valid level if this range is to have any credibility. I don't think there's a change of tune on DeFi at all. I'm looking at the technicals, and I've just been making money longing ETH. See, one of my kind of things that I'm fortunate enough to be able to do is that I can hold fundamental views about projects, narratives in the market, FA, whatever, but I'll still always trade what's in front of me. So I could sit there spouting off that DeFi is the biggest scam, piece of shit, it'll collapse, whatever, which isn't my view, but, you know, I could be saying that, and then end up in 5 long positions because my system's shouting at me to get long. So an opinion is cheap, a position isn't, and talk is cheap as well. So the stuff I say, I'll chat shit the whole day, none of that really means anything, but when it comes to trading, I'll be as agnostic as I need to be to make money. And I recommend you have a similar mindset. I will always trade what's in front of me. Always. Especially in crypto. Good luck calling tops. Some of these others, like DOT, for example, these things got listed and then number go up a lot, right? So this is the really kind of strange disconnect that I'm feeling to some extent, that there are so many instruments that are just Link-esque, and I know there's a recent kind of listing bias, etc., but from what we have to work with, they are just trending up since inception, right? So looking for longs on those where you'll expect reasonably limited sell pressure unless there's some, again, fucky governance thing going on, I don't think is the worst idea in the world. I think so let's look at the USDT pair. I think Binance listed this. I think, is there a perp on FTX? Of course there is. Who am I asking? I think for DOT, a reasonable setup. I think the BTC pair looks exactly the same. You can see there was like if we establish this as the range, if you will, something like this. Straightforward argument. If the trend is strong and lightning doesn't strike twice, we've had the failed breakout, tested it here. So if it breaks above again, good chance that that's the low and we trade much higher. So looking to do business on a reclaim or failed resistance, if you will, whatever you want to call it, of the range high after this type of nonsense, I think is generally pretty reasonable. I think the USD pair looks very similar, right? Yeah, certainly on the daily time frame. Sorry, not daily, the 4-hour time frame. I think that makes sense. This one's great. YFI, and I've got my range depicted on the hourly time frame. Now, I think I've got psychological cope that something that's 36k, I'm just like... I sent Donald a DM. I DM'd him, I think, this morning, being like, hey mate, 2 questions. First of all, can you explain what the fuck YFI is? Second of all, can you explain why it's at 37k? And he said no and no. So that's the extent of my FA knowledge when it comes to this coin. But generally, speaking technically and forgetting all my number bias type of things aside, we had a, markup. This is the range, I think, that's reasonable. We've broken out of it, and now coming back to retest it around 34k. If this goes a little deeper, and I get something reasonable towards the top of the range, I'll probably punt it. But with these sorts of things, especially if I don't know them and new coins, etc., if it doesn't do what I want it to do quickly, I'll get the fuck out. So if I don't see like pretty much obsessive buying near or at the top of the range, 34.4, I'll probably get the fuck out. To be completely honest with you, the only set of circumstances which would trigger a long for me, especially given I don't know a bloody thing about this, is probably something like this. Something risk-defined where I can say, I don't know what this is, I don't know what the fuck it does, I don't know what these numbers mean, but you'd have to pay me money not to take this type of setup. So I think that's probably how I'll approach it. But kind of same old range technicals apply. We've broken out of it. Retest / expecting support at the upper boundary. If it fails, there's kind of a whole lot of fluff, and the next area to do business is towards the bottom of the range at 28.5k. Just an interesting technical observation. Levels which get engulfed or reclaimed but never retested kind of act like magnets for price as well, or at the very least they end up being very valid levels should the market pull back to them. Like here, once the reclaim event took place, the failed breakdown, this is a really good example of what I mean by a failed breakdown. Like when I say, oh, something like this at the range low, this is really not a bad example. When you get a big, scary, bearish candle and then it kind of just gets eaten up, and certainly on lower time frames, this would look gnarly. Something similar around 28.5 would be fine for me. So again, range, top, bottom, yada yada type of bullshit. Okay. Do you take funding into consideration when looking for positioning, or is it strictly technical for you? The circumstances under which I would consider funding is if it's like a newly listed type of thing, and I just think funding is completely out of whack, and then I'll usually wait for some sort of wipe one way or another, and then punt it technically. But if the setup's really good, I wouldn't care about funding. I'll just get involved anyway. That's a good question. This is Binance's DeFi basket, and apparently from people much smarter than I am, and that's a very easy accolade to have. However, even, as easy as it may be, people much smarter than me are saying that this index is set up very shittily, and how, the basket of whatever coins or instruments it takes into consideration is just really ugly. I'm willing to take their word for it. However, purely technically, if this wants to come back to around 1k, probably worth a punt, risk-reward wise, right? Range high retest type of thing. And again, this is a really good example, price action wise, of what failure looks like. When I draw this type of shit, this is what I mean. A real effort to break below a key level, and one that isn't rewarded, and you just know when you see this type of candle that the sellers within this consolidation are bricking it. And that's generally what I like. And I also like how this level is untested since that event. It's come close, but untested. And the good thing is, risk-reward wise, at 1047, like, yeah, it's a fine level. But if that fails, then there's kind of dog shit until the bottom of the range. Now, again, I would generally, just as a general disclaimer with the past few instruments we've looked at, these are newly listed things, so the weight of my technical analysis and TA generally is going to be lower than usual, certainly because we don't have the privilege of trading high time frames and, you know, developed price history, etc., etc. But, you know, we've got to work with what we have. So I'm still going to do the same old thing, just maybe risk levels or conviction levels generally won't be as high. I don't have any strong views on these. I'm just keeping an eye on them. These chicks don't even know the name of my band. Kava. This kind of has a similar setup to DOT, where a lot of these kind of tried to break out, but failed on the first attempt, right? So like here, this is just a different time frame. Like you can see the same price pattern over and over and over and over again. Not just in these markets, but generally, this kind of failed breakout shit. And then market finds resistance at the level. And then if the level gets reclaimed, it's very likely that this isn't a double fake and that you get continuation. So DOT looks like that. And you can see that Kava has a very similar setup just on the daily time frame, right? So again, applying a similar logic, break above 4.7, less likely to be a double fake because those aren't very frequent, and then any consolidation or continuation from the level. And again, unless there's some weird governance shit I'm not aware of, price discovery is the more likely outcome. Yeah. Someone says Sol. Is there a perp? Yeah, of course there is. Of course there is. There's a perp of how much my grandmother's ashes weigh on FTX. Cred Nan Ashes perp. Oh, trading view is not updated yet. Anyway, number go up. I mean, what do you want me to say here? Yeah. You know what? I was actually talking to some mates earlier, and I was saying how with SBF, the FTX bloke, Sam, I'm really tempted to just build... Thank you for 200 likes, by the way. I love all of you. Subscribe to the channel. Anyway, I was talking to some mates, and I was saying I'm tempted to just take a chunk of money and create like a Sam index, because it doesn't really seem like the kind of bloke you want to bet against, and he's really building into the infrastructure, etc. And just to get some Sol, get some FTT, get some Serum, trade on Serum, I don't know what just anything this dude touches, and just build a kind of Sam basket and hold it for like 2 to 5 years. I don't know, the guy's not terribly keen on losing in crypto, and the amount of innovation that he's kind of spearheaded, and you know, the guy's not messing about, is he? So kind of a long, maybe you can put up a Sam index on FTX. That'd be a good idea. It's like, yeah, I'm long Sam, you know? But yeah. Sam, the CEO of FTX, SBF. I'm not going to try to pronounce his surname, I'll butcher it. But yeah, guys. And girls. I know we have some ladies watching. I think that's all I've got. Again, the whole thing is replayable. So if there's something you missed, we pretty much went in chronological order from the watch list, so you can adjust accordingly. Not ending the stream quite yet. I want to answer some questions in the chat, and then we'll round off. Any questions at all? Paul says, when a tutorial video about how to get the interest of Russian girls? You do not want to get the interest of Russian girls, trust me. Just you'll have to believe me, Paul. You have to take my word for it. I'm not usually one to appeal to authority, but just trust me. You don't want the interest of Russian girls. The short-term attention, sure, all of that type of stuff, but interest, once you really get weaned into something rather, life takes a different turn, mate. I wouldn't recommend it. If this were a Telegram live stream, I'd say some other things about white dudes dating Eastern European women, but you know what? I'm going to say nothing. But you can probably infer for yourself what I'm alluding to. Charlie says, Cred, do you have a black and white tick list of criteria for you to enter the trade? I used to. Sorry, I did see your question. I used to have a reasonably strict entry checklist, and over time it just kind of dissipated and I put more weight towards discretion. I did write an article on trading psychology, and in it I actually discuss entry checklists and the type of people that should have them and the types of people that really shouldn't, and how to kind of look at your trading log and come to a reasonable conclusion as to whether you require an entry checklist. So go read that. But for me personally, I used to. Certainly for a developing trader, and if you have certain habits, I recommend it. But discretion has taken such a large part in my system now that I don't have a strict entry checklist. Certainly not a black and white tick list. It's more of a kind of mental thing. Donald this Wednesday? Yes, Donald this Wednesday, of course. You'll be in good hands. Raunak says, how to trade coins and price discovery? Buy them. Buy them and use Fiv extensions? I don't know, man. I think generally don't try to catch the top, because the odds are stacked against you. And also get comfortable with less than comfortable entries as well. Those are the things I'll say. Sushi lover, Russian girls are so hard to say. They need much things always. Very high. Yeah, absolutely. Very high maintenance, mate. Especially the Russian girls in like London and the ones who've moved over to the West. The kind of pseudo attempted westernized Russian girls. My goodness. Good luck. It's like a full-time job. Fantasy Cricket Freak. You don't use Ichimoku or any other indicators anymore? Not in the current iteration of my system. Answer there is no, unfortunately. Anything change in these markets since I've been blabbing on? Some really good questions today. Any other tools, indicators to help differ a breakout versus fake out? I mean, I could make some stuff up. Like, oh, just look at volume, delta, footprint, heat map. I don't know shit about any of those things. The best thing that I found in terms of helping differ a breakout from fake out, the first is obviously lower time frame price action. Is the level acting as support if it's a breakout, or acting as resistance if it's a breakdown? Like, what is the actual participation looking like at the level? Is it acting as you'd expect it to? And the other thing would be context. Context is really important. So if you're trending up, and that's probably the most important one for me in terms of differing breakouts and that type of stuff. So if the context or my directional bias or the high time frame trend or whatever big macro thing is bullish, then you should generally trust breakouts. And if the overall context, again, I've got an article on directional bias, and this is something we talk about in the stream and blah, blah, blah. If the context is bearish, then you should trust breakdowns until proven otherwise. Now that also means there's a second side or second side to that coin, which is if the high time frame circumstances are positive, breakdowns in price are not to be trusted as much. And I'm sure you can come to what the fuck I'm talking about, right? If market go up, breakout good, breakdown bad. And then the opposite for if market go down. But yeah, to answer your question, which I've kind of tried to do, tools or indicators: 1, price action itself; 2, context. Where is the market? What's the dominant trend, etc., etc. I'm sure that someone could, draw like a nice Twitter diagram of fucking volume, divergence, OBV, whatever, but it's not 100%. And I've just found context and price action are far more reliable than kind of indicators. I mean, the whole thing with bearish divergences, for example, like if you try to say a market is in a strong uptrend, and if you try to sell every bearish divergence and sell every breakdown, you'll just eat a plate of shit. or sell every breakout as well. You just won't have a nice time, you know? So context is really helpful in that regard. Just stop looking for tops and bottoms, really. Vid1 says, who's going to be the guest this Friday? I don't know. I think we need to figure something out. I woke up on Friday. I'm sure some of you experienced this. When you just wake up and you're just like, nope, not today. Today is cancelled. Just wipe it off the calendar. Fast forward me until tomorrow because just today is not happening. Sounds like a very kind of white girl concept, but that's how I felt on Friday. So apologies for my absence, but we will try to get someone on for Friday. Yeah, I'll bully Gainsey into getting a mic. That's a really good idea. All right, ladies and gents, think it's a good time to wrap up. Over 220 likes. Love you all. Subscribe to the channel if you haven't already. As always, Bybit, much love, sponsor of this show and the newsletter. Their links are in the description, and you know the amount of creativity and freedom, blah blah blah, they afford us is genuinely a really big deal. So thank you to them. The newsletter comes out tomorrow at 8 p.m. UTC. It is free. Every week, more paid newsletters are cropping up. Not saying they're bad. I actually don't have a fucking clue. Too cheap to pay for them. However, if you want to join the don't pay for newsletters crew, Technical Roundup is good and it's free. And it will complement a lot of these live streams and fill in the gaps and the cracks that may fall between videos. For now, that's all I've got. I will see you in written format tomorrow and then on Friday. Subscribe to the channel. Let's get us to 10k. Follow me. Patreon, OnlyFans, Teespring, buy my merch. And I'll see you for the next one. Bye-bye.